Today's financial tip is about investment strategy. We all share the goal of increasing our investment results. However, research shows that trying to time the market can be difficult and counterproductive. It is extremely important to follow your plan and adjust your strategy over time based upon the phase of life that you're in. Here are 4 key considerations as you head into the new year. First, review your overall investment mix. Generally speaking, the longer your time horizon, the more time you'll have to benefit from the ups of the market and recover from the downs. It is important to keep in mind that the investment strategy that may make sense for you as you're accumulating your wealth may not be the best strategy that will help you preserve your wealth through retirement. Second, diversify across asset classes. Diversification can help you reduce risk within your portfolio while still achieving your long-term goals. Third, consider taxes. Many of us have money in taxable accounts as well as tax advantage accounts like 401ks, IRAs, and Roth IRAs. It's important to understand how the growth of your investments will be taxed depending on which account they're held in. Lastly, have a plan for monitoring and rebalancing your portfolio over time. Rebalancing your portfolio with a disciplined approach will keep you in line with your target risk tolerance. This will be important whether you're still saving and need to allocate new money to your portfolio mix, or if you're in the phase of life where you're selling investments to create your retirement income. And those are 4 quick points on investment strategy, your financial tip of the day.
Are you prepared for retirement? Schedule a free financial assessment with an experienced financial professional right online at purefinancial.com.